Assalamu alaikum friends. I hope that you guys are fine and doing great. Today we're going to discuss with you IFRS 16 and highlight the key changes brought with the standard for lessees mainly as compared with the old lease accounting standard IAS 17. Our today's video is going to help you understand the recent changes made in lease accounting standard, and we are going to elaborate it and discuss it with you guys in an easy to understand manner. So please stay with us to the very end, listen us to the very end, and stay aligned with us. So let's start, guys. Move to our next slide. IFRS 16 accounting for lessee. Lease is basically an agreement that conveys the right to use an asset to the lessee against transfer of agreed consideration to the lessor. All leases will be reflected on balance sheet irrespective of its classification as operating or finance lease. Under the new standard, all leases will be reflected on balance sheet irrespective of its classification as operating or finance lease. Initially all leases will be measured and reflected in the balance sheet on the present value of the lease payments involved in the contract. Right of use asset will be presented at the present value and the lease obligation will be reflected in the balance sheet. Subsequently, we will depreciate or amortize the asset over its useful life, that is going to be the lease term, and the finance cost on lease obligation will be recognized. Lease obligation will be measured at amortized cost over the lease period. If there is a contract in which there is a service element as well, then we need to separate the service element and the right of use element, because right of use asset will be classified as a lease and the service agreement will be charged to P&L on straight line basis. IFRS 16 have although given exception for short-term leases that are less than 12 months and low value leases. IFRS 16 accounting for lesser classify into operating or finance lease. Classify into operating or finance lease. The lessor will continue to classify it into operating or finance lease. If it is a finance lease, the lessor will book it as a revenue as a sale transaction. Otherwise, he will book the operating lease and record revenue on a straight line basis. It is the same treatment that the lessor used to account for under the old accounting standards, so no changes for the lessee for the lessor. Example IAS 17 versus IFRS 16. For example, ABC company enters into an agreement with XYZ Limited for usage of warehouse that is owned by XYZ for a period of, let's say, 3 years against payment of quarterly rental payment of peak year 1 million. Under the agreement, XYZ Limited will provide cleaning and security services to ABC, the price of which is built in the quarterly payment. The standalone price for cleaning and security services is peak year 65,000 per month. Now we will see that how ABC will account for under old and new accounting standard. Under IAS 17, it is a rental agreement for use of an asset, so it is an operating lease. ABC will charge the rental and the service expenses in P&L on straight line basis, and there is no need for distinction between the service and the right or use asset element, and no lease asset or lease obligation is required to be booked on balance sheet in the books of the lessee, as the risk and reward have been retained by the lessor. So what will be the treatment under IFRS 16? As the agreement includes the right of use element, it is a lease and it is for a period of more than 12 months. So the exception does not apply here. We will need to book the right of use asset and lease obligation in the balance sheet. The agreement also includes a service element, that is the cleaning and security charges. We will need to separate that from the lease element. Services will be valued at the standalone price that was 65,000 per month. So on quarterly basis, it means 1,95,000. All leases are required to be reflected on the balance sheet of the lessee. Initial measurement of right to use asset and lease obligation will be on the present value of the lease payments involved in the contract. So that will be 1 million less 1,95,000 for services is on quarterly basis into 4 for 1 year into 3 for 3 years for the lease term, and then multiplied by discounting factor to calculate the present value. Let's assume that peak present value is peak at 8 million, so asset will be booked initially at 8 million and lease obligation will also be booked at 8 million. Asset will be depreciated on straight-line basis on 3 years and lease measured on amortized cost, as it is a financial instrument which will be settled through outflow of cash. In P&L, depreciation and finance cost will be charged compared with the rental expense that was being charged for the lessee under the old accounting standard. The expense in earlier period is likely to be slightly higher as the obligation value, the liability value is going to be higher in the earlier period, and it will reduce as payments are being made by the lessee to the lessor. So the spread of expense is going to change a bit. In earlier period under the new standard, the expenses are going to be slightly higher compared with the later period. However, over the tenure of 3 years, when we will compare, there will be no change in the total expenses recognized under both accounting standards. As balance sheet have been changed, the debt equity ratios, liquidity ratios will be impacted, and as expense pattern have been changed, profitability ratios will also be impacted under the new standard. For lesser, there will be no change. He will continue to reflect as he used to measure under the old accounting standard. There is no change on cash flow statement as payments are being made on the same pattern. What will be impact? Pattern of recognition of expense have changed for the lessee. As we discussed that in earlier period it will be slightly higher, and in later period it will be slightly lower. Under the old accounting standard, the lessee would have charged it on straight line basis. Certain ratios will be impacted like liquidity ratios, profitability ratio, debt equity ratio, and all these agreements will be reflected in the balance sheet in books of lessee. Thank you guys. I hope that today's video will help you to understand the key changes made in the leasing accounting standard. Take care. Bye.